All right, ladies and gentlemen, welcome back. We got another chart talk coming at you. It is Tuesday, February 21st. Long weekend is behind us. President's Day is behind us. And it looks like the first bull run of the year is also behind us. So without further ado, let's get into this market outlook. Let's see what we're dealing with out there. So right now I got the S&P 500 up on my screen. And I drew this trend line in a circle. When we first broke this trend to the upside, we've been looking for this retest. So let me explain the little backdrop of the conditions for now. Of course, this year got off to a very hot start. Here we are at the lows, late December, and then January we propelled higher, nice move higher. Since last Thursday, we began to see sellers hit the tape. This small little hammer candle here, or shooting star, if you will. We saw the last 2 hours of the day some extreme selling pressure. And we took that as the sign to take our foot off the gas to long side. So we raised a lot of cash that day. It ended up being a great move, as we're seeing, that downside continue with a 2% down day in the S&P today, about 2.5 in the Qs, and around 2% down day in the Dow. It looks like that Dow is not going to break that flag to the upside. We've been looking at that for a while, but there was relative strength out there today. We got some great information. It looks like an absolute bloodbath, but I'm seeing actually a decent amount of strength under the hood. Maybe I'm being too optimistic. I don't know. The one thing I wanted to point out was when we saw this selling that I'm bringing up Thursday, that was because the Fed's Bullard, who is a non-voting member who has no power, who's a little bitch boy, he said, don't count out the Fed to hike rates higher than they've previously said and things like that. And it just sent the market selling hard. That was the first harsh selling we've seen. And it really took out the growth stocks, which we've seen make a comeback this year. Like the snowflakes, the chewies, the high-powered tech and software stocks that we saw so strong in COVID. Then we saw them crush the hardest in this bear market. Then they began to come back at the beginning of the year. And then once Bullard came out and said, we might be hiking higher than first anticipated, those were the first names that sold off. And we're seeing a shift back to value names. We saw this Walmart very strong today, even though they warned on their outlook. Heaven keeps pointing out this McDonald's, down 0.5% today, but, still in the middle of its range Friday. When you look at what the market did today, that's a very nice day. And there's still healthcare, is actually holding up pretty well. I like this Cardinal Health a lot. But that's enough of my spiel. I'm staying positive. We're about to close month 14 of this bear market, as I put in the newsletter. Average bear market is 9.6 months. I'm starting to believe the lows are in, honestly. I think the lows from last October hold up at this point. We'll see. But I'm starting to get positive and focus on the bigger picture a bit. That's it for my little spiel. What are you thinking over there?
All right. So again, last week we were talking a little bit about this kind of 10-year retest, this area of resistance,
and the 10 years ripping, by the way. But,
yeah, and that again, and you were touching on this. So you're like, if we kind of see a push through, this resistance area, we should probably expect some selling pressure in the broad markets, and that's kind of exactly what we're seeing. Again, a lot of what you said, I feel somewhat the same. This is the first selling that we've seen this year. We had that amazing run, from the beginning of the year, 12, 13%. I think it was like 2 weeks ago. 2 chart talks ago, I was talking about how I took off like a decent ad that I had in the SPY up near this like 410 because it just seemed a little extended. And now that it's rolling over, yeah,
that's nice.
It was in the moment, it seemed maybe premature that I was like, it's still kind of trending upwards. But now you look at it, I'm glad I took the gains because now that money, when it pulls back into 390 or 380, I can just kind of load back up. But looking at a lot of the like recent trades that I got out of in the last week or so, as they're starting to continue to roll over, they're just good reminders of why we want to keep risk tight. Even this LW, this is probably the first time I've looked at a 15-minute chart in years, trying to watch this, thing tick through 101 on Friday. And
it was nice having you part of the intraday, huh?
Yeah, it was like, I'm like the fact that I'm looking at a 15-minute chart of this is, I knew to start raising those stops. But again, it still looks great in time through this 101, but it just reminded me of like the monsters and some of these other names that I was just getting in too early that they're just not really ready yet. And maybe this LW might need a little bit more of a shakeout before it really wants to rip through.
I think you got to put that LW in context with the rest of the market's doing. I think it's very, very
Yeah,
strong.
I still think
I'm still in
looks,
it. I've sized
yeah.
down. I've sized down like 75% because I'm just protecting. But it's like this thing's around all-time highs. The market stops selling for a second. This should be through new highs.
Yeah, but this is again easily one that like this risks even from here through 101. I could easily get right back in. But again, a lot of the sectors, it just I kind of highlighted the big picture. We just need the market to reset, and that's just normal. You can't expect just these breakout stages to continue into perpetuity. Like they need to reset, they need to pull back in, you need higher pivot lows to form. And so this is just normal action. So it's just, nothing really here. We saw look at this move in telecom, 80 to 100 is 20% plus move in a month. You have to expect some type of pull in, but we're seeing constructive action. We're seeing bigger bases forming. We're seeing, higher pivot lows forming. So for right now, the next week or so, let the market pull and let it settle out. And then we'll find some support buybacks when the dust settles, or we can just buy that LW through 101. So with that, Jake, do you have any top ideas or good and bad trades you want to go over?
Yeah. I'll share my screen a little bit. But I do want to contend, we're coming right into this back testing zone. And for the first time, every time we've made one of these runs, obviously minus the first breakdown, made a run, this 200-day simple moving average has always been resistance. Now, the 200-day simple moving average is a classic. This is apparently how hedge funds look at stocks: uptrend or downtrend. Above estimate, up above the simple moving average, uptrend; below it, downtrend. Well, every time we've tested it, it's been this huge resistance level, and we sold off from there. This is the first time we're ever going to back test it, and we're like pretty much back testing with a slow, methodical sell-off. I don't think the action's been terribly, terribly bad, even though today we sold off, yes, and it was a stair step down, just controlled selling all day. But I think this is the best chance we have to make a higher, once again, another higher low. I wouldn't count the market out just yet. I don't think, it's like risk off for the next month or so. I think maybe this next week is like, BS. But I think, early March, we might get one, might be setting up for a great run again. So I'm still tracking the best names. I'm very, very focused on this MSI. They had really nice earnings. Jesus, what am I doing? Really nice earnings. You can see this huge macro level, right? Obviously. And then what do we got here? Huge move on earnings, closes higher, 6%. And then, a beautiful descending flag to the downside. I bought a little bit today against this Friday low. But the spot is this 272. And I'll show you the intraday. Let me see this. All right. Here's an hourly chart. We could see, so they let it break this 272 area, breaks highs 273.80, and that's why the tail on the daily chart shows this. But if we learn looking at the intraday, look at these highs. You can see the highs right here. Bam, bam. 272.03, 271.88, 272, 272.13. So we know this seller is sitting right at this 272 area. Once he breaks 272.25, I'm looking at that as the trigger, and I'm going to put my full position against this 265.49. So I bought a little bit this morning, this afternoon, just because it made a little bit of a higher low, holding up really well. And the market's selling off so drastically. We get any sort of relief bounce tomorrow. I think this one begins to move higher viciously. So I like that one a lot. And I really like this Cardinal Health. Upgrade after upgrade. Weekly chart is now, huge week on earnings, inside week. Now, now it's consolidating once again, working up towards this high level. And, once it takes out this 80-40 is my technical trigger. That's the one I'm really interested in. There were a lot of names that, took themselves off the list today. And that's what I was talking about before this. For example, this is like the AI. I'm not saying I was trying to buy this. I was trying to buy it last week down here, but whatever. All these high beta names, these growth names. Once Bullard came out and said rates could be higher for longer, we might raise more than we just saw all the air come out of all the. Can you still hear me? Am I breaking up?
You're good now. You broke up a little bit before, but it's good.
Okay. My internet is just trash out here. So once Bullard came out with those comments, we saw a big change in the market, and those growth names really took themselves out of the battle. They really started selling off, really started showing relative weakness. So I'm not interested in buying any of those names now. Once they start to show better action, maybe once again, but they really got some work to do after how much they sold off. A perfect example, really into this Chewy. No interest in this Chewy now. I wanted Chewy up here through this base break. Absolutely zero interest in buying a pivot here. I want to be buying extreme strength in these names because they're so beaten up. They're still somewhat bottom right names trying to come out of bases. And versus MSI, top right name, making a higher low. This is one I could buy when it pivots. That's a big difference in those trades. So keeping the watch list very focused, trying to keep my finger on the pulse of the market. More sitting this week, but not counting us out for now. So that's really it. I don't have a lot too much to share, but just because we sold off today, don't count us out yet. That's all I'm saying. There's still good action over there. I'm pretty positive.
I'll go over a couple of names really quick. So again, still keep an eye on this monster. Probably going to take out this little pivot low here of 102. So this is a perfect.
When those earnings?
Earnings are a couple days next week. This is a good example of a name where it's like if it pulls it again, I'm not going to touch this after earnings, but this is one where after earnings, if it comes into support more than it has so far, back near 100, we can find that support. Can
you do me one quick favor and zoom out on that chart to show the difference between that and Chewy? Why we would buy that off support? See that top right chart? We buy that one off support every time. That's a great reason to buy off support. Uptrend, buyer supporting it up and up and up. Chewy, we got to buy extreme strength. No buying pivots. Just thought it was topical.
Yeah. So monster like this LW, same thing. Even if this was to shake out at any point, which again I don't want it to because I know you're still in a shake. But if it was finding that support buyback again, top right, it's been strong. It's been flag after flag. These are the names that we can find those little support buybacks where, like you mentioned, the names are beaten up. We don't want to. Like this CHW, this is again more of a consumer staple, kind of lower beta name. We can see this little bit of a base to this 84, 85 forming versus 82. Again, market's a little bit today. This name is kind of ticking through that little base, but just remember, this is a lower beta name. This is not going to break out and run 20 points very quickly. It's, very boring, lower beta stock, but just keep it on that base. AME, this 148, similar to that MSI you were looking at, just, very, big, daily pattern that's been forming for over a year now. And now it's kind of, shaking out these pivot lows, which is fine. But for now, I just want to throw that 148. And we got this FTV, another base like that, CHD through 69. But as we're seeing today, the little pivots that we were keeping eyes on are getting kind of pushed out. So we have to kind of broaden our horizon. And this QSR, again, after that earnings gap down, it kind of bought itself right back up. Would like to see some more consolidation. I would not expect, if this was to run tomorrow into 68.50, that there's going to be this amazing breakout. It's just gone too far too quickly from earnings. It needs to, consolidate a little bit more. But this too, not all-time highs, but you can see that, going back to even 2017, this 68, 69 area has been some significant resistance in the name. So there are some strong names out there, even with the market weakness in the short term. So just keep
value, huh? Value.
Yeah, seems like all these are in that camp for the most part.
And that QSR reminds me of a great great saying. It's just because you think a name is moving higher does not mean it's a long. Entries and exits matter. All right. I mean, with that, it's pretty quick one, pretty concise, huh? That's really all I got. I finished my first AI book, artificial intelligence, and it just solidified my knowledge that I don't know shit about anything. So. and it's just I'll give you a quick tidbit of what was great in the book. It made a really great comparison to the beginning of electricity. Electricity came out, and it should have been widely spread and widely adopted very quickly, right? But because of old systems were still in place, it took 30 years. That's pretty much what they think anything with artificial intelligence is going to happen. So just because we have ChatGPT and things like that, and we have these hot buzzwords about artificial intelligence, And this is, anecdotally from my friends who work in the space and are just way too obsessed with it. We're very far from any of this stuff really, really changing the game or changing any landscapes. But I still think, we're gonna hear that buzzword. It's gonna be like the new blockchain,
Mhm.
companies add blockchain to the name, and it's like, bam, oh no, that's the new big thing. So I do anticipate that still happen, but from actual huge gains in the space or huge changes in industry, I think we're 20 years away from that. That's it. What's up? Anything else you got? You got any watches, any sweatshirts?
I mean,
What's up?
we're both, what do we got? We have a couple of the black hoodies left. We have maybe like 5 or 6 of the comedy watches left. So there's not that many. Once we do finish the last few of the comedy watches, we'll make the new one. So once we sell the last couple, then we'll start making the new watch.
All right. All right. So, on to bigger and better things. 2023 off to a beautiful start. With that, we will catch you guys next week. All right. We don't have to recap or anything, right?